Okay, let's dive straight into our first earnings call this morning. Syrma SGS is on our radar. As we were just telling you, the company has recorded a strong revenue growth if you are comparing it year on year. But gross profit margins have been under pressure. In fact, they've declined almost 600 basis points. JS Gujral, MD at Syrma SGS, is with us now. Mr. Gujral, thank you for joining in. Good morning to you. So it's a very strong 54% growth if you're looking at it year on year. But given the way your stock listed and the way it's rallied, I think the market just wants more. First thing is, if you compare the growth quarter on quarter, then there is a deceleration compared to Q4. And the bigger issue is on the margins. Gross profit margins down 600, EBITDA margins have fallen year on year. So can you just explain to us exactly what's gone in, what's happened in Q1?
Okay. You see, on the top line growth, Q1 typically year on year is a low quarter. It typically accounts for approximately around 20% of the total revenues, and the Q4 accounts for about 30%. So that secular trend over the years is there. So hence you see a de-acceleration in the growth, top line growth vis-a-vis Q4. But then that's been the trend all in the past also. Now on the margins, I think this is a one-off aberration. Healthcare, we are into healthcare business of RFID devices. That has taken a 1 quarter hit. I'll just give you the figures for your reference. Q1 of 22-23, we did a 54 crore rupees of healthcare business, 55 crore rupees of healthcare business. Q4 of 22-23, we did a 45 crores healthcare business. Q1 of 23-24, we have done less than 15 crores. So 40 crores hit on the top line vis-a-vis Q1 and a 30 crores hit vis-a-vis Q4. And this business is approximately 40-45% gross material margin. So 40 crore hit on the top line with a 45% gross margin translates into 17 crores loss of EBITDA and margins.
Okay, so this will be recouped, Mr. Gujral. So what will
but this, as we
numbers
speak,
from here look like in FY24? Go on.
As we speak, we have already done about 10 crores, little less than 9.95 crores in the month of July. And we expect that the Q2 would be about 30 to 35 crores. And then the momentum would go up in Q3 and Q4. So we maintain that this is a one-off aberration in this quarter.
Okay.
And second point which I would like to highlight is on the foreign exchange. Now, these are disclosures. Foreign exchange is essentially related to my purchase and sale. So it's a direct operational income or operational loss. That's why we have shown it, we take it as a part of the operations and not part of the treasury income because it's not related to the treasury.
Okay. All right. Mr. Gujral, we get that point that you're making, but give me 3 big numbers. Okay. What is your current order book? Point number 1. Earlier, you were talking about growing by 35 to 40%, 45% for this year. Is that on? And what is the margin trajectory from here? Order book, revenue growth, and margins.
Order book, we had an order book of 3,000 crores as of March. As of June, it has grown up to 3,500 crores. We maintain that we'll grow at an industry plus average rate. And the first quarter, we have grown by 59% over the last quarter, previous year quarter. So I think the top line revenue, guidance is intact. We are on track. And on margins, we have all the time been maintaining that we would be a around double digit EBITDA margins on the organic business which we are in. We still maintain that we are there. There is no significant erosion in that.
Okay. Mr. Gujral, this acquisition that you have also announced, it kind of opens up a new market for you, medical devices in that sense, right?
Yeah.
Very briefly, could you tell us what this will do to your overall revenues? I think I have some numbers. This company which you've acquired, which is Johari Digital Healthcare Limited, is expected to do about 70 odd crores in profits in FY24.
Yeah. You see, our philosophy of acquiring a company was where it fulfills a gap in my product offerings or gives me some regulatory approval which otherwise would take 3-4 years. And on both these accounts, Johari Digital comes out very well They are approved by almost all the developed worlds, America, Australia, Canada. There are about 15 or 18 products which are FDA approved. And there were very strong depth in R&D. Now, we believe that with Syrma's global reach, the management bandwidth, and the expertise in a very efficient manufacturing, it would leverage the Johari Digital technical competence to give a winning competition. We believe that in the current year, it should add approximately anything between 170 to 200 crores or 180 crores, 190 crores in our top line. And as you said, about 70 crores, 65, 70 crores to EBITDA. It's a very high EBITDA margin business, which is more than 30%. So it fits in very well with our strategy of entering into a very lucrative area where we were not present.
Okay. So that's about the acquisition. Just very quickly, you said the top line growth for the current year should be around 45%, if I heard you correctly, Mr. Gujral.
I said industry average plus.
Okay.
So if the industry grows
above
at
industry.
35, if industry grows at 35, I'll grow at 35 plus. If industry grows at 40, I'll grow at 40 plus.
How much faster than the industry will you grow, sir? How much faster than the industry will you grow? If industry grows at 35, you will grow by what?
About 10-15% higher. 10% higher.
10-15% higher than industry. Okay, got that. So just very quickly, divide the growth for us. I mean, Q1 healthcare had that one-off issue, as you mentioned. But between auto, consumer, industrial, which are going to be the biggest contributors for you in terms of revenue, and which business do you think will be the most margin accretive? Now you've done this acquisition on the medical devices side, so will it be healthcare? From a margin profile point of view, which will be the most accretive business, and which one from the revenue point of view?
Healthcare, exports, ODM are margin accretive. Consumer, automotive are revenue accretive.
Okay.
And we believe that in the current year, consumer, automotive led by EV, as well as industrial, would almost see a secular growth of between 20 and 35% each segment. Some may grow a bit higher.
Okay. Mr. Gujral, with respect to this acquisition, you gave us what this will add. Johari Digital will add in FY24. It's meaningful to your business, so both top line and bottom line.
Yes. But top line, it will be okay. Top line, it will be about 5, 6, 7%. Bottom line, it will be significant accretion.
Right. Is there can you scale this up? Do you expect a significant scale up in the coming years? Because this year, you've acquired it during Q1. Do you expect this to ramp up significantly? And briefly, what kind of numbers are you expecting here?
That is the plan. I believe that with our global reach and the management bandwidth, we should be able to significantly scale this business up in the coming. I'm not saying of this 3 quarters of remaining this financial year, but going forward, I think it will form one of our significant high profit growth areas. And the management focus will be to significantly grow this business.
Got it. Thanks very much for joining us, Mr. Gujral. Appreciate you joining in. And thanks indeed for taking us through all of those details. So numbers and quarter-on-quarter numbers are a little soft, but that's a one-off, as Mr. Gujral explained. And then there is this acquisition as well. Now, Maruti sold a total of 1.81 lakh units in the month of July in the domestic market.